Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to analyze the markets and talk about what's going on. First, we have a nice little pullback in the dollar index. Again, this is just typical market behavior. Markets don't rally for an infinite amount of time. They do have a tendency to go up a little bit, pull back a little bit, go up a little bit, pull back a little bit, go up a little more, and then pull back a little more. So again, we're still in an upwards trend. Okay, so just going to pull out the trade triangles, and we have a plus 100 score. So this is just a typical uptrend. It's finding some support on the top rising star built back in October, beginning of October, October 4th. And right now we kind of bounced off it a little bit in the morning session, kind of got close but not quite close enough. Now let's go ahead and analyze the day session. We went all the way down to around 79.95, right towards the morning session before rallying up into a cup pattern. And basically we kind of pulled back a little bit, and again, there's some profit taking going on the Dow component. Initially, at the beginning of the session, we had a nice little rally, went up a little bit, and now we're pulling back. Again, this is just typical market behavior. I'm thinking that all of the shorts kind of covered in the morning, and now all of the longs are going to start liquidating their positions into the evening. So again, I could see us coming back down to that 200-day moving average, or breaking it and going to around 11,900 towards the close or something like that. Again, just typical market behavior. Dow Jones Industrial Average is struggling to get above that 200-day moving average. I really don't think we're going to close above it. I think we're going to close below the 200-day moving average, and judging by what I am seeing, this could either be a setup for an uptrend, or this could be a setup for another downtrend. So again, this could go either way, and we would need some more information to determine that. And again, since we're coming into earnings season, it wouldn't be surprising to see holiday season, earnings season, to see this market trade a bit in a sideways pattern. Again, I honestly do anticipate this market to bounce a little bit and then continue to go lower until we at least get down to the bottom area of the channel. So again, I think we're trading in somewhat of a channel right now. It's not too big of a channel, but again, I think that it could be a short-term channel. It's not down to a perfect science or anything like that. Again, when you trade markets and you anticipate a perfect channel opportunity, you're not really going to see that. But again, I still think we're going to pull back from the top area of the market and then continue going a little lower. At least that's my expectations for what I think is going to happen. Again, it doesn't always happen that way, but in my expectation, I think it could, if it can't break above that 200-day moving average and confirm above it, we could easily pull back below the 20 and 50-day moving average and continue going a little lower. Now, the Euro-US dollar is trading in somewhat of a bullish manner. It's getting there. I mean, it's bouncing a little bit. Again, we have to look at a couple of the previous area supports. This is a longer term support area, and therefore it's no surprise that we're getting a small bounce in the Euro-US dollar. Again, if you were going short into the 1.3 area, that wouldn't have been a good idea, but I did anticipate the 1.31 to break, which we broke down below, and we broke the 1.32 support area as well. Again, it wouldn't be surprising to see a short-term bounce in the Euro-US dollar. The Italian bond auctions are going well for the most part. But again, my outlook on the economic scenario coming out of Europe is pretty negative. And again, we have our own set of austerity issues to go through here in the United States. So that's going to negatively impact the world economy, and in a pretty major way. I don't have enough time to talk about that, so you'll probably have to look through a couple other videos to see what I mean. But right now I'm just going to be talking about the markets, the short term, and the technicals. Euro Japanese yen did pull back again, people are still diversifying outside of Europe, and a really good area to diversify if you're a financial institution and you want to sell your European bonds, um, would be to take your euros, turn them into the Japanese yen, and then buy Japanese treasury bonds. And the main reason why Japanese treasury bonds are pretty appealing is because the market for Japanese treasury bonds are somewhere around $15 trillion. So again, for us who need a humongous market to I guess support the demand, you would need to take it into a market that borrows a lot of money, and right now Japan borrows just as much money as the United States, and therefore, if you wanted to, I guess, protect your money, and I'm assuming a lot of people are going to continue buying up Japanese treasuries. Now, the silver spot. This silver spot has, again, bounced up from that $28.40 area, I believe. Again, I didn't see it break down below 28.40 ever again, or it never really did reach 28.40. But the main point I want to bring out is that it did once, but then the following time it didn't do it again. So that was the primary reason for why I didn't re-enter into my short position. And now it has continued to go higher. And again, I closed out of my short position on silver. It's continued to go up ever since. Again, I don't regret closing my position. I'm kind of happy that I did. Now I'm kind of looking for a support area, and it's kind of hard to determine where you're going to get support on this chart. My assumption would have to be 28, but again, this isn't down to an exactly perfect science. So, technical analysis is more of an art form, and again, you're never going to make the perfect entry, and you're never going to make the perfect exit. You're always going to leave a little bit of money on the table. So as long as you're willing to put up with those aspects of technical analysis, it couldn't be too bad. But again, we had a small little bounce in the silver chart, and then we're having a hard time staging a longer term rally. So it wouldn't be surprising to see a small bounce and then to continue going lower. And that's just typical market behavior in a downwards trend. Now, I honestly think that if we were to retest this immediately, it would break. But if we were to consolidate for a long period of time and retouch the 28 area, chances are we would still be able to find support. So again, give this some time to play out. If we break below that major support area, it would be a good opportunity to consider re-entering into the short position on silver. Gold, same exact story. I mean, we had that head and shoulder pattern right here, and head and shoulder, and it did break the neckline. So we had a nice little bit of selling in the gold market. Now, since it's already below the 200-day moving average, so it's below the 200-day moving average, and I wouldn't be surprised if gold were to go back up to that 200-day moving average and then continue going lower. So because that 200-day moving average is very important, I honestly think that we will touch the 200-day moving average again, and then depending on whether or not we can break above it and confirm, or we pull back and go back below it, we'll mainly rely upon the dollar, right? And if the dollar is able to find some support and continue going higher, based on the 100 indication of the dollar index trend, plus 100 in the dollar index, plus the fact that the gold spot is on a downwards trend, and you combine the fact that the 200-day moving average is going to be stiff resistance. And remember, guys, whenever a major market closes below the 200-day moving average, it usually takes around the best case scenario is probably around 2 to 3 months. I've seen assets trade below the 200-day moving average for 6 months, even a couple years. So you got to really watch out. It's our first break below the 200-day moving average ever since the 2009 break above the 2008-2009 time frame. And you know, the thing is that when a 200-day moving average is broken, you might you know, retest it a little bit, but realistically, this isn't a good time to be buying gold. This isn't a good time to be buying silver. This isn't a good time to be buying stocks. You're not, if you're not a short-term trader, whether you're a short-term, actually whether you're a short or a longer-term trader, you don't want to be buying stocks right now. Since we're in a downtrend, it makes much more sense for us, and what I mean by a downtrend is this long downtrend on the Dow Jones Industrial Average. See, we broke below that support area. We're never going to break right back above this trend line. It's done. It's over. What I'm going to say right now is this: because we're in a longer-term downtrend on the stock market, if you're a longer-term or short-term trader, it's much better to look for short positions than trying to look for long positions, because it's easy to get caught while you're long, but it's easier to make money while you're short. Even though you can get caught with some short-term losses, it's easier to make them back. So again, silver, gold, and stocks are in a longer-term downtrend. The Euro-US dollar is also in a longer-term downtrend, and we're starting to see it pull back a little more today. And the European Japanese yen is also in a longer-term downtrend, and the US dollar index is in a longer-term uptrend. So again, I think that the dollar will continue to rally, and that will continue to negatively impact stocks, gold, silver, crude oil. It doesn't really matter. So again, take care, folks. And we already did break below that 200-day moving average on the intraday, and that's mainly because of the Euro-US dollar. Let me pull it up. The Euro-US dollar is pulling back again on the session, so that's pretty negative for the stock market. Anyhow, take care, folks. Hope you guys have a wonderful weekend, and I'll see you guys on Saturday or Sunday again. Take care.